Thanks for watching Lessons in Minutes with Jaylee. Like, share, and don't forget to subscribe.
Hey guys, I'm going to continue to look at the concept of cost plus pricing. In a previous lesson, I've looked at the definition of cost plus pricing, what it is, the concept in applying cost plus pricing, and I've looked at an extension to a manufacturing account question where you're asked to apply the cost plus pricing. In this session, I'll be looking at calculating selling price using cost plus and markup pricing. And remember, cost plus pricing and markup pricing is the same. Just to review the concept in applying cost plus pricing, you'll have to determine the cost to produce one item where, of course, you are going to apply your manufacturing account knowledge right there to calculate the cost to produce one item. The other thing is that you are going to calculate markup percentage. And based on the question, you will use a particular percentage that is given to calculate the markup percentage on the cost to produce the item. So this is why the first step is important. You need to determine the cost to produce the item. Then, having calculated your markup percentage, and in doing that, people, you are determining the profit that you actually need to generate from selling this item. Once you calculate your markup percentage, you're going to add that to your cost to produce one item, and that will give it a price at which you will be selling the item for. Let us now review the concept to calculate the cost to produce an item, and that is total production is equal to direct material cost. Remember, this is coming from your manufacturing knowledge. You add your other direct costs, and that will give you prime cost. Then you add your overheads, and this will give you your total cost of production. Remember, your indirect cost is the very same as your overheads. Now, let's look at this question that is taken from the Oxford Principles of Accounts text, and it reads, Sophie manufactures a high-quality occasional table. During a typical month, 40 products are made. The following costs are incurred. Direct cost per table, you have costs relating to direct materials, and they use wood and glass. Direct labor, they have a department for cutting and one for assembly. The indirect cost per month is factory rent, $2,350. Depreciation of machinery, $480. Electricity charges, $390, and the manager's salary is $1,180. And these costs that you're looking at, your indirect costs, those are your overheads. You're required to calculate the direct cost per table, calculate the indirect cost per table, and you're to calculate the selling price of a table. And your final thing is that you are to calculate the profit to be made on the order if Sophie is to take up that order from Deluxe Furnishing Limited of 20 occasional table. So let's look at the response to this. Remember, you're to bear in mind that Sophie's policy is to calculate a selling price using a markup of 75%. So the first that we need to calculate is the direct cost per table. And remember, we are provided with that information. We have direct material for wood, glass, direct labor, cutting and assembly. Let's look at our response. So we're going to pick up the costs for the direct items, and we have wood, 4 kg at $8.20 per kg, and that gives us $32.80. That is 4 multiplied by $8.20. The glass, it is 2.5 kg at $11.80 per kg. So in terms of the cost for the glass, direct material cost for the glass, it is 2.5 multiplied by $11.80, and that gives us $29.50. Our total direct material cost is $62.30. To that, we're going to add our direct labor, and that is cutting. They spend 1.8 hours at $12 per hour to work on the table for cutting, and that is $21.60, which is 1.8 multiplied by 12, and that gives us $21.60. The assembly, it is 1.25 hours, and per hour it is $10. So to get the direct labor cost for assembly, it is 1.25 multiplied by 10, and that gives us $12.50. Our total direct is the $62.30 for direct material, added to the direct labor of $34.10, and that gives us a total direct cost of $96.40. We're now going to look at part B, where you're asked to calculate the indirect cost per table. Bear in mind that the information that you have right here is the indirect cost per month. So we need to determine the indirect cost per table, and per month, 40 products are made. So when we determine the total indirect cost, we're going to divide that by 40 to get the indirect cost per table. So let us look at our response for that. So indirect cost per table, we pick out the factory rent, depreciation of machinery, electricity charges, and manager's salary. And that gives us a total indirect cost of $5,100 per month. But remember, 40 items are produced and we need to determine the cost per item. So we're going to divide this 5,100 by 40 to get the actual cost per table. And that is $127.50 per table. That is the indirect cost. Now that we have calculated the indirect cost, we're going to look at C, where we're asked to calculate the selling price of a table. And to calculate the selling price per table, we add our direct cost, which is $96.40. That was calculated in part A. We add our indirect cost per unit, which is per table, which was calculated in part B, and that is $127.50. So our total cost to produce one table is $223.90. To this now, we're going to add the markup. So we're going to apply the cost plus principle in order to arrive at the selling price. And it is the 75% of the total cost that will give us the markup, which is a profit that will be generated from selling one table. And that is $167.93. Remember, to get this, it is 75% of the total cost to produce one item. And our total selling price is therefore $391.83. How did we arrive at this? It is the total cost plus the markup, and that gives us $391.83. And now that we're finished with that, we can move to part D, where we're asked to calculate the profit to be made on the order from Deluxe Furnishing Limited, and the number of tables that they have ordered is 20. Now, in order to get this, let's look at our calculation. We're going to pick up the 20 items that is ordered, multiply that by the markup percentage value, which is $167.93. While we multiply by this, because this is the profit per table. And if they're selling 20 tables, it is the 20 times the cost per table. And that gives us $3,358.60. And that takes us to the end of this lesson, people, where our aim was to apply the cost plus pricing principle. And remember, that is the markup pricing. And the first thing from this question is that they take you down from scratch. You were asked to calculate the direct cost per table. You were asked to calculate the overhead cost per table. You were then asked to calculate the selling price. And having done that, you are presented with a scenario where 20 tables are ordered and you're asked to calculate the profit to be made from that 20 tables. Remember, to calculate that is the number of items within the order multiplied by the profit, which is the markup to be generated from one item, and that would give you the total profit to be made from that order, if that order is taken up by Sophia. All right. In our next lesson, we're going to look at another aspect of costing principle, and that will be absorption costing, and that is an introduction to absorption costing.
Like, share, and don't forget to subscribe.